On Business Incorporated today, U.S. lifts travel restrictions imposed on Southern Africa. Fitch Solutions revises Ghana's 2021 growth rate forecast to 4.2%. And Egypt to launch first ever insurance policy for Egyptian expatriates on January 1. Hello and welcome. I'm Chimeze Obi Iwago. We get the show started off with our market numbers, and in Africa, just two out of the markets we track are open today. South Africa's JSE index was trading in the green, up almost 1%, while Nigeria's NGX remains closed for the holidays. Meanwhile, the EGX 30 in Egypt traded in the green territory, up 0.20%. And in the Middle East, as major markets were in the green at intraday, the Abu Dhabi index was the only laggard, down 0.18%, while Dubai's index was positive, though marginal at 0.02%. Still within the region, Saudi Arabia added much higher, over 0.5%. Also, the Qatari index was up 0.26%. And European stocks opened higher this morning as holiday-themed trade continues in the region. In the meantime, our correspondent Rob Watts will talk to us about Europe having to source extra tankers full of natural gas from the U.S. as tensions with Russia continues to rise. Moscow has denied it's deliberately restricting gas supplies to Europe, fueling the continent's energy crisis. Well, Rob, tension is continuing to grow between Russia and Europe over natural gas supplies. What's the latest?
Well, the latest on this is that Russia has been defending itself against the claim that it is deliberately restricting natural gas supplies to Europe. We've been getting these claims from Poland in recent days, but the state-run oil and gas company Gazprom in Russia has called those claims groundless. Now, why has Poland been making these claims? Well, in particular, it stems back to something that happened on December the 18th, when Gazprom stopped sending natural gas down a key pipeline, the Yamal to Europe pipeline, which supplies Poland. And actually, it hasn't sent any natural gas down that pipeline in Poland's direction since then. As a result of that, that pipeline has actually been put into reverse, meaning it's been delivering natural gas to Poland, but it's been coming from the west. It's been coming from Germany, and that's something that the Polish government is angry about. But Vladimir Putin says that Europe's problems with natural gas supplies are of its own making. He's been particularly critical of Germany for sending natural gas to Poland, particularly given that Germany has its own problems with getting hold of natural gas. And he's also said that part of the problem is that German importers are trying to profit from the situation. Now, we haven't had any response to that allegation from Germany as yet.
And how deep are Europe's energy troubles?
Well, they run very deep. I mean, if we look at natural gas alone, we can see that the price of natural gas in Europe is at 10 times what it was at the start of 2021. But we're also suffering here in Europe from higher oil prices, higher coal prices. And you can add on top of that the fact that Germany and France are planning to turn off some of their nuclear reactors in the coming weeks and months, meaning that their national grid will be getting even less energy. And all of this together is contributing to a continent-wide crisis. I mean, you look right to the far west and in the United Kingdom, there are energy companies that have gone bust in recent months. You look to Spain, where the government has had to introduce emergency legislation to try and keep household energy bills down. And then when you look to Eastern Europe, there are enormous problems there too. We've just heard from Kosovo that later this week it's planning to start rolling blackouts, meaning there will be restricted amounts of electricity running to the 2 million people that live there.
And what's being done to improve the energy situation in Europe?
Well, one of the things that's being done is to just get hold of more natural gas. And that's why we're seeing more and more tankers coming across the Atlantic from the United States supplying American natural gas to Europe. Bloomberg estimates that that has actually increased by a third since the Christmas weekend. But there are other factors that are also hopefully going to ease the situation here, but they're factors that frankly are out of the control of any of the governments here. We're talking about the weather, for example. Slightly milder winter weather is being forecast for much of Europe. That means people won't be working so hard to heat their homes, so that will be less of a drain on energy grids. And also, we've got the Omicron variant, which is undoubtedly a troubling development here in Europe as it spreads across the continent. But at the same time, any restrictions brought in, for example, on operations for businesses, does mean that energy demand will be slightly lower. But those are things that are, as I say, out of the control of governments here. And the energy crunch in Europe is showing no signs of stopping.
All right, thank you very much, Rob. Now we'll move over now to the UK, where the government has rolled out additional COVID restrictions in England before the busy New Year's Eve trading period. Let's see what the reactions have been. Juliana will bring us up to speed with that. Hey, Juliana, good afternoon. Well, hospitality bosses have welcomed news that the government has ruled out additional COVID restrictions in England. Aside from the hospitality sector, which other sector sees this as good news?
Good afternoon to you, Ms. I think, well, besides the sector, I think a group of people that have said this is a really good decision have been Conservative MPs. Just earlier this month, Prime Minister Boris Johnson faced a very a serious rebellion where more than 100 backbench MPs decided to rebel against Plan B measures. These are the measures that are currently in place in England. So we know that more than 10 million people are being asked to work from home. That didn't go down well in constituencies. And the Prime Minister, for the first time, had to rely on the opposition Labour Party to try and help him get those measures through. So even though we have had some data from the Office for National Statistics showing that over 100,000 people tested positive for COVID on Christmas Day and on Boxing Day, the numbers are still rising, but he doesn't want a political backlash, which is why we got that surprise announcement by the Health Secretary, Sajid Javid, yesterday, confirming that England will not be going into a lockdown before the new year.
Now, Wales, Scotland, and Northern Ireland have already imposed tougher COVID rules on physical distancing and the number of people who can meet, including the closure of nightclubs. Now, isn't this decision that there will be no new curbs on gatherings in England before 2022 divergent from the rest of the UK?
Absolutely, it is. A lot of people are not really happy with this, especially because, you know, there are no borders in the United Kingdom apart from the Irish Sea, which separates Northern Ireland from the rest of the kingdom. But, you know, if you're a reveller in Wales or Scotland and you're not happy about the restrictions that have been put in place there, what you'll just simply do is cross the border and party the night away in England. That's the concern from scientists. And of course, we know, especially during the pandemic, and, you know, the First Minister of Scotland, Nicola Sturgeon, who is keen for a referendum on Scottish independence, the fact that the Prime Minister has decided to diverge, as you were saying, away from the other devolved nations hasn't really gone down too well.
Well, markets open tomorrow after the long Christmas holiday. What are the expectations in the shortened week?
Yeah, it's a pretty quiet corporate week, Chimmy, as you said. Not expecting really many updates. I believe we do have some nationwide house price index data before the end of the week showing just really that the house price sector has been surging during the pandemic, and it keeps on going from strength to strength. I believe we are going to be expecting more conversations about the rising Energy prices, I know you were just speaking about that, and it's affecting Europe. It's particularly affecting companies in the UK. We know there's been about 30 bankruptcies. Kwasi Kwarteng, the business secretary, met with energy leaders earlier this week because there are still threats about further collapses. And even though consumers are protected, business leaders are asking for energy firms to be protected. So I'm expecting more sound bites out of there. Perhaps the FTSE tomorrow likely to open in a high, especially as there are no new restrictions in England. All of the data that we're getting so far suggests that it is a milder variant. Let's see what happens. Let's wait and see, a popular term used in the business world, Chinmay.
Absolutely. We keep waiting and seeing. And I keep saying that. Let's wait and see and hope for the best. Thank you very much, Janella.
Thanks, Chinmay.
And shares in Asia rose today after the S&P 500 notched yet another record close on Wall Street overnight. Japan's Nikkei 225 led gains among the region's major markets as it gained 1.37% on the day to 29,069.16, while the Topix index advanced 1.37 to 2,005.02. Elsewhere, Hong Kong's Hang Seng Index closed 0.24% higher at 23,280 points. Mainland China's stocks closed higher as the Shanghai Composite gained 0.39% to 3,630.11, while the Shenzhen Component advanced 0.831% to 14,837 points. South Korea's Kospi ended its trading day 0.59% higher at 3,020.24. MSCI's broadest index of Asia-Pacific shares outside Japan climbed 0.5%. Meanwhile, markets in Australia are closed on Tuesday for a holiday. And U.S. futures remains in the green after stock indices rose on Monday as markets reopened after the Christmas holiday and investors assessed the spread of the Omicron COVID-19 variant. The S&P 500 gained nearly 1.4% on Monday to close at 4,749.19 points, marking its 69th record close of the year. The index also hit an intraday record for the first time in more than a month. The Dow Jones Industrial Average added 351.82 points. The Nasdaq Composite ticked up about 1.4% to 15,871 points. Our market strategists remained positive on the overall equity outlook amid a surge in COVID cases. New studies suggest the Omicron strain has a lower risk of hospitalization than other COVID variants. Investors are looking for a Santa Claus rally to close out a year in which the S&P 500 has returned more than 27%. And on global oil market, prices gained more ground today with prices trading close to last session's one-month high this morning as expectations that the Omicron coronavirus variant will have only a limited impact on global demand. Brent crude rose 7 cents to $78.67 a barrel. U.S. West Texas Intermediate crude rose 18 cents to $75.75 a barrel, gaining for a fifth straight session. Both markets were trading close to Monday's peaks, their highest prices since late November. Oil prices have risen around 50% this year, supported by recovering demand and supply cuts by the Organization of the Petroleum Exporting Countries and its allies, collectively known as OPEC+. Investors are waiting an OPEC Plus meeting on January 4, at which the alliance will decide whether to go ahead with a planned 400,000 barrels per day production increase in February. And on metals market, gold held steady in early trade today at near one-week high hit in the previous session as the U.S. dollar and Treasury yields, key influences on bullion's prices, were largely flat. Spot gold was mostly flat at $1,810 per ounce. U.S. gold futures were up 0.2% at $1,811.70. Benchmark U.S. Treasury yields and the dollar index steadied on Tuesday. Analysts have said gold trading is likely to remain thin and range-bound this week. We'll take a break, and when we come back, there's more to give. Do stay with us. Welcome back. And certainly a difficult year, but the year 2021 has seen Nigerian economy recover at a faster than expected pace since the pandemic-induced recession in 2020. All the sustained positive growth is as a result of the statistical base effect after the economy contracted by 6.10% and 3.62% under the pandemic. The coming report looks at Nigeria's economic performance so far and outlook for the coming year.
By the fourth or at worst the first quarter of 2021, that the country will exit recession.
That was the optimism with which policymakers entered year 2021 after 2020 that was described as a year like no other owing to COVID-19 pandemic. True to the minister's words, Nigeria exited the recession in the fourth quarter of 2020 earlier than expected. The economy grew by 0.51% year-on-year in the first quarter of 2021, slightly faster than a 0.11% rise in the prior period. 5.01% year-on-year in the second quarter, owing to base year effect, and 4.03% in the third quarter.
I use the word the three T's. It was a tumultuous year, it was a turbulent year, it was a trying year. But in spite of these challenges, we were able to at least eke out a modest growth.
Aside from the fairly improved GDP, all other critical macroeconomic variables are not favorable. The PMI is still below the 50-point threshold. Unemployment rate is at a double digit. Inflation remains elevated at 15.4%, despite data showing it's trending lower.
The price for the market is too cost. All water, even the pepper, common pepper now, they are selling 1,000, 2,000. Even people that can buy small one, they can't be able to buy small one.
Everything there for government hand. Are you understand? Because I know that economic now they bring all this thing high. I will that economic is okay. Everything will come down.
And the big elephant in the room remains the foreign exchange.
We saw serious levels of depreciation in the exchange rate, which was very significant and had very serious impacts across all sectors of the economy. There were also concerns among investors in particular about the volatility of the exchange rate. Because in order to plan, particularly long term, you have to have a very stable, foreign exchange environment. We didn't quite have that.
The IMF is projecting a growth rate of 2.6% for Nigeria's economy in 2021. The central bank sees a 3% growth rate, while the fiscal authority remains more optimistic, with a 3.5% projected growth by the end of the year. While these projections are positive, COVID-19 still poses a risk, coupled with a slow progress on revenue mobilization.
It's very important to grow at higher rates. In our view, that will require much deeper reforms, resolving the fiscal situation, bringing balance, making sure that fiscal deficits are lower.
2022 should be a year of specifics. Specifics, no mirage, no promises in the air.
The year 2022 no doubt offers some flicker of light at the end of a very long dark tunnel. But that light can only shine brighter if the policymakers take the bull by the horn by making some decisive basic structural changes in the way the economy is presently run. And with the 2022 budget now passed by the National Assembly, awaiting President's assent, Nigerians can only hope for the best. Chimeze Obiwago, Channels Television News. And the United States has announced that traveling between the U.S. and Southern Africa can resume on the 31st of December. The announcement takes place 1 month after the U.S. suspended all flights from the region following the announcement of the Omicron variant. South Africa, Mozambique, and Malawi are amongst the 8 countries that can resume traveling with the U.S. after the 31st of December. Many African leaders denounced the travel suspension as unfair and pointless. According to the Biden administration, Omicron infections are already present in the U.S., therefore making the travel suspension pointless. Experts have warned that the Omicron variant is already the main source of COVID-19 infections all over the world. And Ghana's economic growth rate for this year has been revised slightly further down to 4.2% by Fitch Solutions from the earlier forecast of 4.5%. This is despite a 6.6% expansion in the economy in the third quarter of this year, the highest since 2019. Prior to that, the International Monetary Fund had forecast a gross domestic product growth rate of 4.7% in 2021, whilst the World Bank had projected 3.8% to 4.5% GDP. In its first quarter 2022 Ghana Country Risk Report, Fitch Solutions says it expects Ghanaian economic growth to come in below trend at 4.2% in 2021, largely as a result of a fairly modest recovery in household spending following the first phase of the COVID-19 pandemic in 2020, this compared to average of 5.3% over 2015 to 2019. The Ghana Purchasing Managers Index fell below 50 points in July and August 2021, indicating declining private sector activity when restrictions were tightened amid a third wave of COVID-19 infections. The report says modest consumer spending will be the main cause of economic underperformance in 2021. And the annual inflation rate in Sudan continued to decline in October. However, the food situation in the country remains stressed and may become worse in the coming months. Earlier this month, the Central Bureau of Statistics in Sudan reported a slowdown in the annual inflation growth in October for the third month in a row, recording 350.84% as against 365.82% in September. According to the report, the inflation recorded in October was mainly driven by the 208.55% rise of the prices of the food and beverages group that affected the already dire purchasing power of the average Sudanese even more. An updated report on Sudan shows that humanitarian assistance needs remained high that month, driven by political instability, above average food prices, and reduced household purchasing power, along with the impact of increased conflict, tribal clashes, and protracted displacement and increasing numbers of refugees, in particular in eastern Sudan. Food insecurity in Sudan is expected to rise between November 2021 and May 2022. Egypt will start implementing its first ever insurance policy for Egyptians living abroad on January 1, 2022. Egyptian expatriates can register for the policy online with the Egyptian Pool for Travel Insurance through the pool's website and pay an insurance premium of 100 Egyptian pounds annually. Egyptian expatriates' remittances reached $31.4 billion in the full year 2020 to 2021, increasing 13% compared to full year 2019-2020 and 70% compared to full year 2013 to 2014. In recent years, the state has been encouraging expatriates to play an active role in supporting various development projects at home. A minimum age of 65 has been set for experts looking to register for the insurance policy, which covers accidental and natural deaths. And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezi Obi Iwagu.